Hello and welcome. Good morning. You're watching Market Cafe on ET Now. It's me, Snehisha, and with me is Shreyansi Singh. Now, this is a show where we're going to take you through everything that happened in India as well as globally after our markets closed yesterday, all the stocks that were in action yesterday and the ones to watch out for today, as well as what brokerages are making, especially of the numbers that we did see trickling in yesterday post-market hours. But on that note, let's kickstart the show with the global markets then. And Shreyansi, rather flat day coming in for the US, but back-to-back decline for the S&P 500.
Well, absolutely. Good morning, Steve. And that sums it right up because when you take a look at the US markets, that largely is the kind of handover that you're looking at now. When you take a look at the S&P 500 as well as the Dow, you're looking at marginal declines coming in for both of them. And when you take a look at Nasdaq, though, on the flip side, that rose just about 0.2%. So that's the kind of move that you saw coming in for the Nasdaq as well. When you take a look at the 10-year Treasury yield, though, that has been on an upturn of late. So briefly topping that 4.2% level that we saw coming in and keeping stocks under pressure as well. So that is also something that we've seen also slightly pressuring equities as well. And robust economic data is, of course, the backdrop that all of this is coming against, along with deficit worries that are among the factors behind the rise in the 10-year Treasury yield as well, despite a half-point rate cut from the Federal Reserve in September as well. Now, in terms of what else traders are concerned about, traders are also growing concerned that the central bank policymakers may be less inclined to reduce rates. So that is something that the market is keeping an eye on, even as the Fed had forecasted another half-point worth of trimming before the year ends as well. Now, a slate of notable names, of course, will be reporting earnings on Wednesday. AT&T, Coca-Cola, Boeing are also on deck before the bell, and Tesla and IBM will be sharing results after the close. So that largely is the kind of handover that we have both in terms of the markets as well as the earnings that we're keeping an eye on. Lastly, let's take a quick look at the European markets because they closed just a tad bit lower. So that largely is the kind of handover that we have shaping up, at least when it comes to European equities as well as the American markets as well. But let's also take a look at US crude oil, Snehi, because extending gains is where the oil market was at this point.
Absolutely, it's looking good for WTI, not looking very good for Brent coming in right now, although that has also surged slightly, but right now Brent is under pressure, 0.4% lower, $75.75 per barrel is where Brent is at. But if you take a look at what WTI was up to yesterday, US crude oil futures extended gains after rising nearly 2% in the previous session. Oil prices have bounced back somewhat, after selling off steeply last week. Traders increasingly view a supply disruption in the Middle East due to Israel-Iran tensions as unlikely. Weak demand in China has also weighed on prices recently. Also, remember, Beijing cut its benchmark lending rates on Monday, lending some support to the futures markets. So that's roughly everything that's been happening with oil. Of course, in the background, you have the entire geopolitical stress that comes into play. On one hand, you also have the US elections that are near approaching. Trouble continues for Nikkei as well. You have China that's getting back some footing, but lots is happening in China, and basically the oil producers and consumers are both in focus on the back of this Israel-Hamas war that has been going on for more than a year now, and oil continues to be volatile, but it's looking good for WTI because it's above that 70 mark at $72 per barrel. Brent holding on to that $75 per barrel mark. But let's move on, talk about something that's been shining really bright, quite literally, and that is gold. Because gold has hit an all-time peak on Tuesday as factors including safe haven demand spurred by the US election, uncertainties and the Middle East war, combined with expectations of further monetary easing to amplify the bullion surge. Spot gold rose 0.7% to 2,739.8 per ounce after hitting a record of 2,744 earlier in the session. So closed very close to where the record high was for gold, and even right now it's 2,758 coming in for gold. And US gold futures also gained 0.6%. Now remember, the bullion is considered a hedge against geopolitical and economic uncertainties. It has gained over 32% just this calendar year, reaching multiple records. Lower interest rates have also increased the appeal of holding gold. So lots of factors when it comes to the surge in gold as well. But well, yes, phenomenally well is what gold is doing for itself, another record high for gold. But on that note, let's keep it going with commodities now. And Goldman Sachs expects oil prices to average $76 a barrel in 2025 based on a moderate crude surplus and spare capacity among major producers, with concerns easing over a potential disruption in Iranian supply. The investment bank said there is a possibility that prices could rise towards year end, as it seems that Brent time spreads underpricing physical tightness somewhat. Additionally, they believe the geopolitical risk premium is limited for oil, as Israel-Iran tensions have not impacted supply from the region as well.
Alright, then let's keep it going with important commentary bright and early this morning, and let's take a look at commentary coming in from the IMF then, because the IMF has flagged the risk, rising geopolitical risks and weak long-term growth prospects for the globe as well. IMF now expects inflation to fall to 3.5% on an annualized basis by the end of next year versus the average 5.8% in 2024 as well. And in their World Economic Outlook, the IMF also said that it believes the battle against inflation is almost won, even as it called for a policy pivot. And the fund kept its global growth estimate at 3.2% for this year and 2025, which it called stable yet underwhelming at this point. Additionally, they also have lowered outlook for other advanced economies, notably the largest European nations, as well as several emerging markets, blaming intensifying global conflicts and ensuing risk to commodity prices as well. So that's the latest update when it comes to the IMF then.
Okay, let's move on, shifting focus to more important commentary from the ECB chief Christine Lagarde, who believes inflation in the Eurozone region will ease to 2% faster than expected, supporting the case for further rate cuts from the central bank. Sounding extremely optimistic, she said that she is confident of scaling a sustainable course in 2025. Still, she argued that caution was warranted and the ECB was not yet in the position to declare victory.
Moving on to what's brewing at Starbucks, because shares of global coffee giant Starbucks slid after the company posted a decline in sales in the fourth quarter. Chief Brian Nicole highlights the need for a shift in business strategy. The company's same-store sales slipped for the third consecutive quarter, fueled by a 10% tumble in traffic to its North American stores. They also raised the quarterly dividend to provide some certainty to investors as it tries to turn around the business as well.
Well, on the flip side, General Motors has given investors something to cheer about after the automaker raised its guidance for a third time this year, in addition to easily beating third quarter revenue and profit expectations. For the quarter gone by, the company has posted an over 10% surge in revenues, and shares of the automaker soared 8% in early hours.
Moving on then and shifting focus to some corporate action as well, HSBC has unveiled a major overhaul, announcing a new geographic setup, consolidated operations and a new CFO, the lender's first female finance chief. This is the second heavyweight leadership shake-up for HSBC in recent months as well. Additionally, newly appointed history-making new chief financial officer Pam Kaur is a battle-hardened risk and audit veteran. Remember, she's the first woman to occupy the role in the bank's 160-year history.
Okay, well, and it seems to be trouble for McDonald's, because shares of global fast food giant witnessed steep declines after the Centers for Disease Control and Prevention said an E. coli outbreak linked to the company's Quarter Pounder burgers has led to 10 hospitalizations and also one death. The agency said 49 cases have been reported in 10 states between the 27th of September and 11th of October.
Alright, moving on then, Prime Minister Narendra Modi is in Russia's Kazan, where the 16th BRICS summit is currently underway. He held discussions with Russian President Putin and Iranian President Masoud Pezeshkian as well. On the sidelines of the summit, President Putin hailed the Russia-India cooperation as special, while claiming that it's becoming stronger by the day. In fact, PM Modi also reiterated the importance of dialogue and diplomacy to resolve conflicts as well. He also said that India was ready to offer all help to Russia to deal with the ongoing Russia-Ukraine conflict. Let's listen into what else he then had to say.
एक्सेलेंसी, रूस और यूक्रेन के बीच चल रहे संघर्ष के विषय पर हम लगातार संपर्क में रहे हैं। जैसा मैंने पहले भी कहा है, हमारा मानना है कि समस्याओं का समाधान शांतिपूर्ण तरीके से ही होना चाहिए। शांति और स्थिरता की जल्द से जल्द बहाली का हम पूरी तरह समर्थन करते हैं। हमारे सभी प्रयास मानवता को प्रमुखता देते हैं। आने वाले समय में भी भारत हर संभव सहयोग देने के लिए तैयार है।
Okay, on that note, we also caught up with Anil Trigunyat, the former ambassador to Jordan, Libya and Malta, on how India can play a role in bringing peace amid this entire situation. Let's go across and listen into what he had to say.
Well, every war has to come to an end, and this particular war has impacted the whole world, especially the global south, in a very disproportionate manner. And therefore, it is imperative that the war is ended. Prime Minister Modi, from the very beginning, has been saying the dialogue, diplomacy, and respect for the UN Charter are the main fulcrum through which you need to continue to achieve peace. But at the same time, it has not happened. So therefore, now Prime Minister Modi himself has been talking repeatedly to President Putin, as well as he has met President Zelensky and tried to find if India can be an interlocutor, not a mediator, to bring about some kind of a semblance whereby a ceasefire could happen, and then subsequently the main issues of this could be addressed. And for that, Prime Minister Modi has offered a role for India, whichever both the countries feel India can do. And in fact, the whole world currently believes that Prime Minister Modi and India can play a constructive role in diffusing this crisis to some extent.
All right, so there you go. That's the expert view coming in when it comes to the 16th BRICS summit, as well as Prime Minister Narendra Modi's views when it comes to this particular summit. But time for a very quick breather on the show. When we come back, we'll take stock of how the Asian markets are faring, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets and see what they're doing at this point. Firstly, let's take a look at Japan's Nikkei. That is the one that was trading just below the flat line there on your screens as well. South Korea's Kospi as well in the red. Let's also take a look at exactly where that one is at, because 0.6% decline is where what you're seeing when it comes to South Korea's Kospi. Australia's ASX 200 as well started the day up. Let's see if it's holding on to those gains. And on your screens, uptick of just about 0.1% coming in. So not a very strong Q coming in, but a shade of green coming in for ASX 200 as well. Let's also take a look at Hong Kong's Hang Seng, because that's the one that is holding on to that shade of green just a little bit at this point, because 0.7% uptick is what you're seeing for that one. Shanghai flat with a positive bias is where that one was at, currently holding on to some of those gains at this point. 0.2% uptick coming in for Shanghai as well. Of course, back home we shut shop around the 24,400 levels, and currently what is being penciled in is largely a subdued start, especially with that handover coming in, where 2 out of 3 US indices also were in the red, ended the day with cuts as well. So largely not a very good handover, and against that backdrop, let's really see how that pans out for us and if it turns out to be a subdued session for us as well.
You know, absolutely, and it's looking to be a rather flat start for us, and even a 70-point uptick on the spot right now does not mean much for us, given the market cut that we've seen yesterday, and how we close has, in fact, how we open really has no impact on how we close, because even if we open higher, we are losing some momentum when it comes to Nifty. But on that note, here's everybody who's going to be joining us on the market today, starting at 9:20. We'll be joined by Gautam Shah, CMT founder and chief strategist at Goldilocks Premium Research. And he's going to be here to help us understand how to navigate volatility that we're seeing in the market and the spaces that he's still seeing positivity in. 9:30 a.m. we'll be joined by Rigantharia, co-founder at Green Edge Wealth, and he'll be talking about the insurance outlook, especially in the light of the Bajaj Finserv and Allianz news flow that we've seen yesterday. At 10:10 we'll get kick-started with the earnings discussion there, and we'll be joined by the management of Union Bank of India. Ram Subramanian S, who's the ED, will be joining us to talk about the outlook going ahead. Keep it going with earnings at 10:20. We'll be joined by Suresh Iyer, Managing Director and CEO at Canfin Homes, to talk about what the Q2 shaped up to be and what the outlook is looking like going ahead. And lastly, at 10:45, we'll also be joined by Sandeep Kalra, the CEO at Persistent Systems. Remember, a stable set of numbers coming in, so the focus will be on the outlook going ahead for that company as well. So lots of interesting conversations lined up today. Stay tuned to the market.
Alright, then that's a power pack lineup for you right there. Welcome back. Thank you so much for staying tuned in. Well, let's get you some earnings reactions then. And it was a largely steady quarter coming in for Bajaj Finance, as the company's rural B2C business saw double-digit growth after almost 8 quarters, and marginal rise in cost of funds as well. That is something that kept margins stable, but asset quality on the other hand has deteriorated. In fact, Varun is standing by with the earnings fine print. Varun?
So definitely it was a mixed quarter for Bajaj Finance, a bit here and there, but if you look at the overall results, they were tad as per estimate. Now you look at NII, it was 8,830 crores, we expected 8,980 crores. The PPOP, we expected a growth of 25%, and that is what the company has delivered. The PAT has been around 4,014 crores, which is almost as per estimate. Now there are some key points that you need to look into the results. One, the good points are, the company is saying that the NIMs have stabilized for the company. Now this is good because in the previous quarters we have seen a decline. The B2C business has now come into double digit growth after 7-8 quarters, and also they don't see any stress in the B2B business as well. Also, the company has said that the loan default rates are actually lower. So this is also some a good commentary from the company. But there are also some other points that you need to take care of, and that is the overall loan losses. This time also it has been around 1900 crores, and from last 2-3 quarters it is continuously increasing. Also the gross NPAs, if you look, it has come up from 0.86% to 1.06%. Also, if you look, the company has said the overall festival demand, if you look in the starting of the festival season, it has been okay because the overall discretionary demand has grown by around 20 to 21%. The company is cautiously optimistic about the future, and the company has not changed its guidance for the long term. So overall, if you look, the numbers are mixed. The commentary is also okay. The only worry part is the gross NPA that has increased.
Varun, for taking us through that. So mixed set of numbers coming in for Bajaj Finance, but it's also been a mixed set of numbers coming in for Zomato this time around. Let me run you through what these numbers look like. And I call these a mixed set of numbers because revenue has come in largely in line with what we were expecting. Revenue has come in at 4,799 crore rupees compared to 4,206 crores last year, which is last quarter, which is up 14.1% sequentially. We had an expectation of 4,681, so largely in line with what we were expecting. However, it's been a miss coming in on the PAT this time around because that's come in at just 176 crores compared to what we were expecting at 260 crores, and you have a current tax amount coming in of 76 crores that has weighed on the PAT this time around. So it's been a miss on that front. EBITDA, however, has been a beat compared to what we were expecting at 209 crores. It's come in at 226 crores, which is an uptick of almost 28% on a sequential basis. And if you take a look at margins, largely in line with what we were expecting at 4.5%, margins have come in at 4.7% compared to 4.2% last quarter. Also, the board has gone ahead and approved the fundraising of via QIP of 8,500 crore rupees. Segmental performance, if you take a look at the revenue growth, food delivery grew 4%, quick commerce 23%, going out business, if you include the Paytm acquisition, the ticketing business acquisition, it was up 62%. If you exclude it, like growth was 32% on a sequential basis. Hyperpure also did pretty well, 22% sequential growth coming in. If you take a look at the GOV growth across the B2C business, that came in at 14% sequentially. Food delivery GOV growth was slightly a miss compared to our expectations of 7%. It came in at 5%. However, on the flip side, quick commerce, which is Blinkit, did pretty well because we were expecting a 15% GOV growth, and that's come in at 25%. So large outperformance on that front as well. Going out business GOV growth was 46% sequentially, like for like coming in at 29%. District app is all set to go live in 4 weeks, is what the management has said. They've also said that the food delivery business remains steady and will continue to grow well. Largely in-line set of numbers coming in for Zomato, but a mixed set because we've seen a slight bit of a miss on PAT. Food delivery rather subdued, slight miss coming in on that front, but Blinkit is the one that outperformed. But also let's go across and listen into what Zomato's management had to say as they share their outlook on the recent fundraise, the quick commerce business, as well as the dark store expansion for Blinkit. Listen in.
We have enough cash in the bank, and so I would like to say there's no plan. I mean, we're not raising money to start discounting more. I think we have to do what is right for the business first, and we don't think therefore discounting is going to help our business at this point in time. Therefore, is purely to strengthen our balance sheet for nothing else. The cap on the size is an indication of sort of the ballpark range where we want to be. But yes, I mean, shareholder approval is pending, and we have to have a sense of the market conditions at the time of the QIP launch. So we'll take that into account and tweak the size if needed. This expansion could be lumpy because we don't control the entire process of opening a store. There's a lot of dependency on external bodies, licenses, and so on. Having said that, broadly, yes, we think they're on track on achieving the 1,000 stores by March 25 and 2,000 stores by December 26 guidance that we had given. We think we are on track on that. But there could be sort of ups and downs along the way, given given how the process is as far as opening a new store is concerned. We've always spoken about 20% plus GOV growth as guidance on a sort of a CAGR basis over the next few years.
All right, on that note, let's also take a look at some brokerage reactions coming in on these earnings and what brokerage houses are making of these earnings this morning. You have a buy rating coming in from UBS with a target price of 320, a buy rating coming in from Nuvama also with a target price of 325, but they have hiked this target price from 285 earlier, so looking good. What's really surprising me this morning is the note coming in by Macquarie on Zomato, where they have maintained their underperform rating with a target price of just 100 rupees per share. Remember, on the flip side, we've had Jefferies come in with a target price of 335 earlier, which has been the highest target price for Zomato. But on the flip side, there seems to be a new low target price coming in from Macquarie at just 100 rupees. They've maintained an underperform. They say that strong momentum has been seen with no meaningful margin dilution happening at Blinkit. Food delivery margin expansion lags consensus expectations. Remember, we were expecting 7%. It's come in at 5%. The QIP raises their concerns on the overall quick commerce industry unit economics in face of sharp increase in competitive intensity as well. So on the back of this QIP announcement that raises their cash on books and also the increasing competition that they're seeing in the entire quick commerce space, Macquarie surprisingly maintaining an underperform with a target price of just 100 rupees per share.
Alright, then moving on, let's also take a look at some more news and updates then. And to provide relief from inflation during the festive season, the centre is set to roll out the second phase of Bharat brand from today across 4 states. Under this, government will sell pulses, rice, flour, etc. at concessional rates. In fact, Sameer Dixit is standing by with more details. Sameer, so 7 commodities to be sold at a discount. Tell us a little more about the key highlights then.
Amid the ongoing festive season and in a move to provide the consumer some sort of relief from the inflation, the government is going to start the second phase of Bharat brand from October 23rd. And under this Bharat brand, government will sell pulses, flour and several other commodities at a concessional rate. So for the first time, 2 more commodities has been added under the Bharat brand, and this include Bharat brand Moong Dal and Bharat brand Whole Gram. So these 2 commodities have been added, and in totality 7 commodities will be sold at a concessional rate from tomorrow. So this include Bharat Atta, for which for a 10 kg of Bharat brand 10 kg Atta, the price has been fixed at rupees 300. Similarly, for Bharat rice, the price has been fixed at rupees 340. For Chana Dal, it is rupees 70 per kg. Whole Gram, for 1 kilogram, it is rupees 58 per kg. Moong Dal has been fixed at rupees 107, and Bharat Masoor has been fixed at rupees 89 for 1 kg. So these are list of commodities which are going to be sold at a concessional rate. Starting with NCCF, the government agency will be selling these commodities in Delhi, Rajasthan, Gujarat, and later on, after 10 to 15 days, this will be extended across the country. What we are picking up from our sources that the government is also in talks with the e-commerce companies and retail stores so as to expand the network and the distribution channel as well. So government understands that this will help to provide some sort of relief from inflation, and the consumer can get commodities at a concessional rate.
Okay, thanks Sameer for taking us through all of those details, but let's talk about an issue that's been threatening the entire airline system, and that's the fake bomb hoax that we've been seeing. That seems to have taken to a wider target, with the latest tally coming up to 50 such calls. The staggering rise is a concern for airlines and public authorities alike. Sumit Chaturvedi is here with more details and the latest update on everything that's been happening with this situation. Sumit.
Well, there's increasing threat to airlines. Today, also around 50 hoax bomb calls were made to airlines. If we divide the number, Indigo 13, Air India 13, Akasa 12, SpiceJet 11, well, the menace is growing every passing day. It's more concerning for authorities because the high and the peak festival season is coming, especially this weekend will be peak season when it comes to overall these problems. So authorities are worried. Today, the numbers has crossed 50. Now the airlines are also taking the threat in a different way. Diversions are less. However, any diversion will lead to a problem when it comes to the overall issues in the system. So diversions, yes, there will be, but they will be less. However, the system is overwhelmed with the number of threats that are increasing every day. 50 today is the number, and it can go up by the end of the day. Over the weekend, BCAS had held a meeting with airline CEOs, and certain instructions were given to them. However, the airline threats numbers are increasing. That's what is worrying factor for the authorities. It has to be seen over the next few days what steps are taken, because the coming weekend is very, very crucial.
All right, thanks Sumit for all of those details. Moving on to an ET Now exclusive then. ET Now is learning from sources that the government is moving ahead with the disinvestment process of IDBI Bank. Bidders' due diligence will start in November as well. Remember, IDBI Bank has also received RBI's fit and proper approval, and the government had received multiple EOIs last year for a total of 60.72% stake in the bank as well. Prakash is standing by with more details. Prakash?
Yes, an important update on IDBI Bank disinvestment, as we are learning from our sources that the government is moving ahead with the disinvestment process of IDBI Bank. We are given to understand that the bidders' due diligence will start in November, and the financial bids for strategic sale of IDBI Bank are likely in Q4 of the current financial year. Along with that, interested bidders are likely to get access to the data room in next 15 days. In fact, they have already received security clearance from the Home Ministry. The process to finalize draft share purchase agreement in consultation with the bidders will be initiated soon. In addition to that, sources are also confirming that the reasonable time would be provided to merge both entities to comply with the RBI's regulation to ensure promoter holds only one bank license. As you are aware, that the IDBI Bank has already received RBI's fit and proper approval, and now the government is moving ahead and trying to speed up the process.
All right, let's move away from that. And Hardeep Singh Puri talks about the reduced APM gas allocation and says that it keeps happening and there are ups and downs in the supply, but it's not an issue. He also talks about the crude prices going ahead. Listen into what he said.
No shortage of oil in the world. Now, there are other factors like geopolitical tensions, etc. So what happens? There's no shortage of oil. But if there's tension in one part of the world, then the cost of, if you have to take a longer route, then the cost of the freight cost, the insurance freight cost, that will go up. Let's all say that hope better sense prevails. The call for peace, etc., which our Prime Minister has been making from every forum, that is time for diplomacy and for finding solutions. And this situation, we hope better sense will prevail. There's more than enough oil in the world and prices should hopefully come down. Now there are some global factors because the cost at the retail point is determined by the cost of the barrel in the international market, plus the cost of transportation, freight, plus insurance, plus retailers, plus refining cost and margin, then dealers margin, etc. We are solving all the problems we can.
Alright, then there was some key commentary coming in from the oil minister, expecting a little bit of a decline in fuel prices is what he's saying. But with that, let's slip into a very short break. When we come back, we'll take a look at the stocks that you should keep on your radar as well.
Hi there, welcome back. Thanks so much for staying tuned to Market Cafe. You're watching ET Now. Let me take it across to my colleague Ansh now, who's joining us for an F&O snapshot. And Ansh, what levels are you spotting on Nifty as well as Nifty Bank, given it's a Nifty Bank expiry today?
Right, so if you can see the chart, Nifty actually gave a breakdown from those September low support zone of around 24,650, 750 mark. It also gave a dip below that 100 DMA for first time in 4 months. But this dip below that 100 DMA was not very decisively. That 100 DMA lies around 24,550. So if we give a pullback back above that 24,550, we can have some hopes in the market. So one can have 1 or 2 sessions hold in the market. Now, if we talk about index options, then we are seeing call writing happening at that 24,600 strike, indicating strong resistance around this level. Now shifting our focus to Nifty Bank. So Nifty Bank index has been hovering around that 50 DMA from last 13 to 14 sessions, indicating absolutely a neutral stance and not bearish in the market. In index future, however, we are seeing open interest has gone up by around 3%, indicating some short build-up. Also on option front, like you said, yes, today we have Nifty Bank weekly option expiry, so we may see some good volatility in banking stocks. And here we are seeing call writing everything has been happening most actively at that 51,500 strike, indicating option traders are expecting this level to have some strong resistance in today's session. Lastly, let's shift our focus to stocks in focus. So we are seeing very significant short build-up happening in BHEL, DLF and Tata Chemicals. So keep an eye on those levels and on the stocks.
Well, absolutely, Ansh. We'll keep an eye on all of those counters on account of short build-up. Let's also go across to my colleague Jinay, who's standing by with a list of stocks that we should be watching out for on account of news flow then, Jinay.
Well, definitely. Let's start with the earnings counter. Then M&M Financial Services will be in focus. If you look at the revenue grew by 21%, whereas the PAT grew by 57%. Although the main highlight was the cut in guidance from the management, the company has actually cut the guidance for ROA. Now stands at 1.8 to 2% versus the earlier guidance of 2.2 to 2.5%. Also, GMDC reported its numbers. If you look at revenue, it grew by 71%, coming in at 128 crores versus 75 crores year-on-year basis. Also, EBITDA margin saw a good 240 bips improvement this quarter. So definitely there will be some action on this counter as well. Moving on to Coforge, let's look at this revenues. Then the revenue was boosted by Kidney's performance as well. If you look at the revenue, it was up 28%. Net profit jumped 52% to 202 crores. Also the EBIT margins improved a bit, about 60 bips, coming in at 9.4%. Moving on, Paytm will be in focus. Now, the company did report its numbers yesterday, but the company has also received its NCPI approval. They will be now allowed to onboard new UPI users on their application. Moving on, Power Grid Corporation will be in focus on the back of orders. The company has won 2 projects under a tariff system. This is for transmission system in Rajasthan, and RITES have also secured a turnkey project worth around 454 crores. So that is definitely on focus. And lastly, Adani Enterprise will be in focus as a company will be mulling fundraising plans on October 29th.
Okay, thanks for that, Janelle. Lots of stocks to watch out for in today's trade, but let me also take it across to my colleague Gaurav now, who's joining us with a list of the stocks that brokers are keeping on their radar this morning. Gaurav, good morning.
Well, yes. Let's begin our list today with Citi, with Varun Beverages, because Citi has now maintained buy rating and a target price of 800 rupees. What they say is that after result, they are being a little bullish on this stock. They say that the company is actually gearing up in 2 fronts, which is category and territory. In India, we saw a little bit of impact of the heavy rains in this quarter, but EBITDA still remained strong. And at the same time, what they say is that multiples are at a rich level, but the support, I mean, the robust business is actually supporting this multiples, and that is the reason why they are being bullish on this counter. Next, let's talk about cement sector. Recently, we saw Ambuja Cement acquired Orient Cement, and on that, Macquarie has said that Ambuja Cement is strengthening its footprint in south and can also add some expansion in the north segment. So Orient Cement was acquired at a price of around $120 per ton, which is at the upper end of what we have seen in the deals lately. And what they say is that Orient Cement has a preparedness to actually expand their footprint in the South Indian region, and they also have expansion plans in north as well. So that is definitely going to help Ambuja Cement, and that is the reason why they are being a little bullish on the acquisition news that has come in Ambuja Cement. Lastly, when it comes to capital goods segment, there also Macquarie has said some of their and given some of their views. So what they say is that L&T has emerged as a L1 bidder for NTPC's thermal power plant tender. Now what happens is that what they believe is that there is a threat to BHEL because of this, because 100% market share of in terms of the BHEL is not going to be a case anymore. What they say is that FDG installation and in incremental power segment is also going to be halted, and that is the reason why they are being a little bullish on BHEL. So definitely watching out on all these counters on the back of the brokerage note that we have received in a day.
So while you're with us, there's a lot more earnings that are slated to come out as well. SBI Life is the one that makes it to that list as well. Muted BNB growth is what we're keeping in terms of the expectations. What else is being penciled in when it comes to this one then?
Well, yes. When it comes to SBI Life, now we have already got the AP numbers. When we talk about AP numbers, we may see this growth somewhere in the range of 5 to 6%. What we have seen for SBI Life is that the base for SBI Life was a little high, and that is the reason why we may see a little bit of muted growth in terms of numbers at least. When it comes to VNB margins and VNB growth, first of all, when it comes to VNB growth, we may see a little bit of muted growth there as well. We may see this number being flattish on a YY basis. Let's not forget that Q1 was a little weak for SBI Life, and not just SBI Life, overall industry for insurance, and that is the reason why we may not be able to compare the QOQ numbers. But when it comes to VNB margins, now we may see a little bit of increase in VNB margins. Now, when we talk about YOY margins, we may see a little bit of contraction because of the higher ULIP share that we have seen. But when it comes to expansion on a sequential basis, we may see better product mix, and that is the reason why the street is penciling in VNB margins to remain somewhere around 27%. Other than that, any kind of view which is coming up on the outlook on the non-par saving product is going to be crucial for SBI Life's journey ahead, and at the same time, any kind of impact on the new surrender value norms which will be there in SBI Life is definitely something to be looked at. But in front of numbers, we are not expecting any kind of positive surprise. We are seeing a little bit of flattish growth in SBI Life. Definitely watching out on how actual number comes out for the company.
Absolutely, Gaurav. Thanks for taking us through that. In fact, another nifty company coming out with its numbers is HUL. We're also expecting a flat set on that note. But with that, it's a wrap on this edition of Market Cafe. Sharansi and I will bid farewell to you. But on that note, you stay tuned on ET now, because the market takes all the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.